À l'avenir.
Hi, Brittany. Hi, Heidi.
Décidez-vous que les discussions soient lues en anglais ou en français? Each team has 20 minutes to present its case to the judges. I will hold up the sign for the last 10, 5, and 2 minutes, as well as for the last 20 seconds of the presentation. During the last 10 seconds, I will indicate with my fingers the numbers of seconds remaining. If you have not finished your presentation after 20 minutes, you will be stopped in order to proceed with the Q&A period. A Q&A period of a maximum of 5 minutes is allocated to the jury at the end of your presentation. Please note that at any time you cannot say or reference the name or the location of your university.
Are you familiar with Copernicus, the astronomer philosopher? Yes, maybe? Okay, yeah. Well, he was a priest, a Polish priest. And he was the first person to come out and say, perhaps all the planets in the sun didn't necessarily revolve around the Earth. Perhaps orbiting actually happened as the planets, including us, including Earth, orbiting around the sun. Being a man of religion, this was completely unconventional. It was against anything that he's ever learned. He could have been ostracized by this entire community. But because he came out and said this, Galileo was then able to take what he had found and conclude that orbiting, in fact, didn't happen in circles. It happened in ellipses. And because of that theory, Sir Isaac Newton was able to conclude on the principles of gravity. Because of this string of events, we now develop technology that can be placed on Mars. We send people into space. We do miraculous things because one man went against the grain. He did something that was different, unconventional, and no one believed him. But because he did this, he became great. Good afternoon, executives of EWE. My name is Brittany Rockwell. This is Heidi Malanchak, and this is Alex Hedges-Sophocles. And today, our proposal, this afternoon, it might be slightly unconventional. It might be a little against the grain. But these are the things that you have to do in order to be great. So moving on, trying to draw this back to your industry, to the wind energy industry. What drives your cash flows? Right now, you're looking at an industry in Canada. You're looking to expand. You're looking to do something that, again, other companies aren't doing quite yet. It's mature in Europe. What can we do? Where else can we expand? Canada seems like a great environment to do so in terms of government assistance. Subsidies are great. It's similar background. The risks involved aren't quite high. But you always have to come back to the fundamentals because it's still a complicated issue regardless. So if we were to really simplify your problem, what are the 3 factors that drive your cash flows? The first one is net capacity factor. You can have a facility, but if your net capacity factor isn't high enough, you're not making money. You can have a capacity, you could have an extremely large capacity, but if you're only having a net capacity of 38% or lower, you might not actually be able to drive those cash flows to what you actually need to. Your construction costs. What you hope to do is have a 5-year horizon plan, investment horizon plan. After 3 years, you want to be done construction, and after those 2 years, you want to continue on, flip the company, prove that this company can actually generate certain cash flows, and then sell it and move on to the next. In order to do this, your construction costs have to be low, or you're neutral at the end of it, and that's just a waste of time for everybody. The third one would be potential buyer demand. Is this an industry that 5 years from now will actually reap the benefits that you're expecting to, that you're actually banking on? So with these 3 cash flows in mind, whatever actually affects them at the end of the day needs to be considered. And you'll see them reflected in the analysis that we'll be giving later on. And you'll also be seeing them in our valuation at the end of the presentation. So the way that we'll be going on about doing this is we're recommending that you acquire Bloor Wind's PPAs for $10 million upfront. They don't actually have an existing operation right now. What they have of value to you is their government agreements. So buy that out for $10 million, raise $40 million in equity from EWE, from the existing Denmark operation, and then you want to raise $245 million in debt through Canadian or American financial institutions, And then you can actually make 43 million on this acquisition. So the way we'll be going about the presentation is we'll be doing an analysis as well as covering certain alternatives of how you could actually raise this capital. We'll then we'll be going into detail of what our recommendation is and why it makes the most sense for you. And then we'll be explaining how to implement this over the course of 5 years, as well as how are you going to finance this operation more in depth. So now I'll be passing it over to Alex, who'll be going over the renewable energy industry.
Renewable energy is growing at a fast rate, as we all know. It's shift from coal and from pollution and from resources that are polluting are creating global warming and polluting our world. Therefore, going to renewable energy such as the windmills is a very new trend, and it's very important for our world to go towards that, and it's a growing industry. So wind energy, as we all know, is clean and it's sustainable, which is very important because the coal and the energies such as coal and other energies are not sustainable and cannot last forever, where wind is always here on our planet and it's something that we can generate forever. Also, there's some things we need to look at in the industry of windmill where we need some land, a lot of land to use those windmills, because people don't want a windmill right beside their house. People don't want to have a windmill beside their house because it can cause a lot of noise and it can cause a lot of distraction and a lot of bad around the houses. Therefore, they need a lot of land to have a windmill, which you have found, obviously, with what was proposed already. And to move on, we will talk about the Porter's 5 forces, which is to see the general competition in the industry of windmill and to know what's going on in the industry. So competition is quite low. This is looking at Canada. In Denmark, it is already a mature industry. However, in Canada, it's low because it's just starting now, and there's a lot of opportunity for growth because it's starting now and not many businesses are doing it. So having the first mover advantage will help for that. For supplier power, right now it is high, and it's planned to stay high because suppliers are basically the people who, like Siemens, you have a contract with Siemens, and they're the people who basically have a monopoly or oligopoly. Therefore, they have a major control and they have a high control over the industry. And for the buyer power, is low right now because there's not many companies who are doing windmill energy in Canada. Therefore, there's not many companies they buy from, and the government controls all this. Therefore, as we know, the government controls this, and people don't really know where their electricity is coming from. It's coming from the government, and the government, with the PPAs, must purchase from the windmill industry. As for threats of new entrants and substitutes are still high because there's a lot of other renewable energies such as the solar panels, and there's also still a big trend in the non-renewable energies, but that is planning to decrease in the future, and of course renewable energy are going to increase in the future. As for the threat of new entrants, it's still medium because there's other companies as yours which are looking into this opportunity. But right now, if you move in first, it is a great potential for growth because you'll be the first one to be doing, one of the first ones to be doing this. Moving on to how we calculated our discount rate. So looking at Green Tech, we found that this was the most comparable company to yours because they did have a 75 megawatt. They produced 75 megawatts per year, therefore you produce 100, therefore it's very similar. So we chose this and we used their beta to calculate the CAPM. And we used a market rate of 12%, which is the market rate of about 30 years in Canada, and a risk-free rate of 3%. This calculated our cost of equity, which is 15.6%, and our cost of debt was calculated using the the rate of 1.2%, which is the rate of the Canadian interest rate, plus the 350 basis point. In the first year, it's going to be plus 700 basis point because you do have that extra fee of 350 basis points on the interest rate. And in all the future years, it's going to remain at 4.79% for the cost of debt. So as we know, it's a very high leverage, leverage that you want. Therefore, 85% debt and 15% equity is what we see as the optimal debt to equity ratio. And the WACC calculated is 5.39%, which is what we use to calculate our DCF, which Heidi will be discussing in greater detail.
All right, so the first thing that we're going to look at is your revenues. So your revenues come from how many megawatts you're actually producing. Now, it's really important to take into consideration that the total megawatts that you're producing, that's not actually what you're getting. Wind power is historically very inefficient in terms of, everything that's generated isn't converted very well into the electricity that can actually be sent back up into the power grid. So you're actually only getting 38% back, 38 megawatts in terms of your 100% capacity. And then you also need to take into consideration a couple other factors that are going to lower this. First of all is the turbine availability rate, which is 96% for the first 2 years. And then in future years, it's going to be 97.5% for every year. So I guess I should mention first off that this is only the first 5 years that we're looking at right now. The first 3 years are the construction years, and then the first 2 years of actual production, where you're going to be monitoring and how much you're actually getting in terms of production, and then that'll let you value the company in the future. However, as the turbine life is 25 years, DCF was done for a 28-year period into the future, with no terminal value then, because the turbines will be obsolete after that point. So continuing back to what I was saying about the capacity factor and also the degradation is the turbines are from Siemens. They are excellent quality. However, 17 years into production, they're going to start to degrade and lose 1.5% of efficiency every year. So that is taken into consideration from year 17 through the 25 of the production period. So that gives us to our total production in megawatts. And then in order to find the production capacity in megawatt hours, which is how it was priced, we took the megawatts produced. This is on an hourly basis, multiplied by that for 24 hours a day, 365 a year. And then that gave us our total annual production. And then we calculated the electricity price at a completion of the contract, at the completion of production. So that gave us the price of $101.50 per megawatt hour produced, which then gives us our total revenues for the project. Then there's our expenses. So the main first 3 years during the construction phase is when the main capital is going to be required. And the expenses, as you can see, are $39.9 million in the first year, $65.55 million in the second year, and then $179.55 million in year 3. And that is going to allow you to produce 1,000 wind turbines from Siemens will be erected for that cost. It'll give you an asset base of $245 million, which is the cost of the turbines initially. The turbines from Siemens, yes, they are more expensive. However, they are top quality. They're from a company that you already have pre-existing agreements with, who's really top of the line. And you don't want to, make the mistake of going to a cheaper company such as the Chinese, because there have been issues in the solar power industry where the Chinese have taken wind turbines from North American companies, and they have disassembled them to obtain the intellectual property within the wind turbines for the actual mechanisms themselves. So that's why we're going to stick with Siemens despite the higher price tag. And then the following expenses, royalties 2.5% were listed. Then the maintenance cost is $14 per kilowatt hour produced. Then there's a continuing rental fee of $2,000 per year for all the turbines. And then the following expenses, the land lease, the insurance, the admin expenses, were all based on the expenses seen at your operations in Denmark, which we believe are the best comparable for future expenses. So that gives us our total expenses. Then we also looked at our interest expenses on the loans that we're taking out, as were discussed earlier. We're going to be taking out $245 million in terms of debt that we're going to have to pay interest on. So that gives us our total revenue over expenses. Now in the first 3 years of construction, we're going to be going heavily into debt before we start having positive cash flows in year 4 from our production. Now, the tax rate used, we used a rate of 25%. This rate was chosen because this is going to be considered a small business venture. It will also be eligible for tax breaks from the Canadian government for green energy. Therefore, you'll be paying less than the overall, advertised business corporate rate of 38%, which will be very beneficial for you in the future. And also with the wind energy, you're also going to be benefiting from the fact that you can take 50% CCA right off the bat. So that will, basically effectively allow you to write off the cost of the construction over the first 5 years of the project. And what that does is it really lowers the taxes payable that you have, which will increase your bottom line. So at the end of the day, you can see the bottom line, there's the net income loss that we have. And then, as mentioned earlier, the capital cost is 5.39%. Now, 5.39% as a cost of financing may seem low. However, the wind industry is a very low risk industry, as mentioned earlier. The wind will blow, and also debt is very cheap right now. So the cost of raising the 85% debt capital is going to be very, very, very low, and we will not have a high cost of equity in terms of the 15% that's equity, increasing our discount rate. So what this really means is that overall, for the entire 28-year period, the 3 years of construction and then the 25-year useful life of the wind turbines, we'll have a basically a value of just over $43 million. Now, this is very conservative estimate, the 43 million, and there's many other things that you can also do to bring down the cost of your financing, and that will increase the value above $43 million mentioned earlier. So in terms of sensitivity, it would be to look at an interest rate swap. So what that would mean is, because your home company's in Europe, then you can basically finance in euros, swap that back to the Canadian dollar, and you will make a higher return on your investment. So then there's some risks, and Brittany will continue with that.
Thanks, Heidi. Okay, so I know that slide might have been a little long, and I hope that you can see it on your printout afterwards as well. But just to establish, risk involved, obviously, it is still low risk because it is backed by the government, but we've learned that just because it's backed by the government, it doesn't necessarily ensure that it's a completely low risk venture. Now, taking into consideration what's going on in Quebec right now, there's a lot of political instability. There are a little bit of issues in balancing our budget. However, we mitigate this risk because whatever PPA agreements they have, they're federally backed as well. And Canada overall is doing fairly well. In terms of space and the concepts themselves being an eyesore, they're localized in areas that the general public won't necessarily have an issue with. They won't be able to see them. You have a lot of space in Canada. It's an excellent location in this sense. If you continue on, in terms of demand, a lot of the time with cash flows, you can't necessarily assure that a certain amount of cash flow will be able to be coming in five years down the road. However, with the PPA agreements, you can. In terms of the implementation plan, we'll just be skimming across them just very briefly. You'll be really seeing cash flows. You can see them, ask questions later if you'd like. In the 4th year, you'll be seeing cash flows. You'll be able to start paying off your debt. You'll be making $327 million to sell it for, totaling off for $43 million in overall profit. So thank you very much. If you have any other questions, feel free to ask. Thank you.
Can you go to the slide about the DCF, please? Your discount rate, you use the WACC to discount it? Okay. Is your interest expense re-added to the net income? Because right now, your free cash flow to the firm is net income plus capital cost, if I understand right?
Yes.
Okay. And why aren't you re-adding the interest expense? Since it's kind of taken in the account into the discount, right? Okay.
And in terms of the, if I understand correctly, there's no depreciation in your schedule.
No, it's in capital
So you
cost.
decided to expense everything, like it's as if it's expended, and you expense it, and it gives you like a tax break going forward.
The depreciation used here, I use the same as the capital cost allowance, so just taking it all right away to make the calculation of the tax rate easier.
Okay. Why are you still paying tax in 2017 then? Wouldn't that make you a lot of like tax shield in the first year, since you're depreciating 50% of your, well, not actually 50 because you have first year rule, but like 25% of your construction?
As you can see, like the capital cost in the first like 3 years, like that's why it's so negative, and you're not paying any taxes there. And then you're having, over $30 million of, revenues, and you're only paying $7 million in taxes really in the future. And like the tax rate the amount of tax doesn't go above $10 million for the life of the project.
Okay.
Can you go back to the slide where you talked about the beta and the risk-free rate, cost of equity, cost of debt? So why for the beta, did you try to adjust for the different capital structure between like green tech and this project? Or you just, why didn't you try to adjust for the capital structure? Because the beta itself, technically, it depends on the amount of debt that you have on the balance sheet.
The beta, the capital structure was a bit higher for Greenshield, but it was very close. I believe it was like 100%.
Okay.
Or something, but we didn't adjust it because we saw it was really close, and it might be changing to, it's around 85, and it's volatile sometimes. Therefore, we didn't adjust for it, and we saw that 1.4 was pretty relevant to the company.
Why did you select Green Tech out of all the other companies?
Because they're relatively around the same size as your company. They have the same amount of, well, almost, they have 75 megawatts per and you have 100, therefore it's very similar. And also the debt to equity ratio is the closest. And compared to the other companies who were more international and were also, some were really larger, some were had very different debt to equity ratios and other different ratios.
Est-ce que je peux poser une question en français?
Ouais, on pense à ça. Je voulais dire ça dans la présentation. Non, c'est bon.
Ben, ça va être plus simple quand même. J'ai vu dans le fond, dans la troisième slide, vous avez proposé un montant de 10 millions pour acquérir Darwin. Vous avez cependant une net present value de 43 millions. Qu'est-ce qui explique cet escompte-là?
Okay. Just for there's a $10 million purchase of the PPAs, and then a $43 million final profit, or a 15% return, rather, for the operation at the 5-year mark. I know that we have decided everything.
So why don't we pay more than 10 million if you're telling me that it's worth with DCF like 40 something?
I can ask. I can answer that as well. Sorry. No, I understand. Typically in Canada, we have ample amount of natural resources, and as we can see, an oil company, for instance, in Calgary, was just purchased by a Chinese oil company, because we don't actually have the monetary resources to actually develop these types of operations. So foreign direct investment this way is actually, in a way, they get their money's worth. There is definitely a return, but we don't actually have the resources available. Canada doesn't typically have those types of investments, especially equity investments in wind energy, because it's kind of a bit of a controversial industry as well. So $10 million seemed like a fair price, because having an actual existing operation going on in Quebec for wind energy isn't something typically done. So selling those $10 million PPAs would actually be quite a fair value in exchange for the trouble that a company would go to in order to actually set a brick and mortar operation.
So wouldn't that be already reflected in the?